They're really out here trying to milk all our money from this 1 hour Zoom limit.
Literally, bro. Shit is so annoying. It's actually so annoying.
Maxime, this one has gone now. Auntie, that rice was beautiful.
Guys, can we meet on mics? You guys don't mind? Damn. Okay.
GK, did you already talk about why Euro USD is like a really big trade and why it's going to make so much money like within the next couple of days? Like, did you already talk about that analysis?
No, I have not.
Okay.
Nope. I will though. Now that you mention it.
Thank you.
But actually, you know what? Just go ahead and like look at this. Like, I mean, can you guys see my screen? This chart.
Yeah.
So
yeah.
Look at the higher time frame structure. We're on the 1 hour now. You can see all the higher highs, higher lows being made. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then what did we finally get? We finally got that lower low past here. You can see this area, it's kind of like a little bit of distribution, right? Price was really, really trending up. Until we get into this area, it didn't really move up that much. Kind of just like bouncing around. And then we finally got that selling volume in the market and pushed down. And notice how this is an expensive area, right? Down here where we had accumulation is a cheap area, right? It's like literally, let's just make it as plain as day. Like this is accumulation right here. Price is in a cheap zone and we're just moving. We're just buyers and sellers. Nobody knows what to do. And then all of a sudden, Americans or just everyone in the world is like, oh, coronavirus doesn't really matter. You know, we can open businesses again. And the second wave is a myth, you know. And so, you know, people think that businesses are going to go flourish and inflate, you know, stocks for no reason. And so the dollar becomes weak and the euro strengthens. So by the way, you know, dollar becomes weak whenever stocks are becoming strong. And whenever stocks are strong, or whenever stocks are weak, the dollar becomes stronger, right? And so right now, you can see the price is falling, which means that Euro USD, being that USD is the second pair, and this is falling, it means USD is gaining strength. And you notice the stock market is doing trash. Actually, this is the Dow Jones. Price is falling. And so you see the dollar getting stronger. But, you know, in terms of market structure, you can see that this is now, you know, distribution level. Selling volume came in, right? Selling volume came in. And we now formed a lower low past this recent low. And so what we can see is now a pullback to create a lower high, and price will fall again to make another low, right? And that's why I expect Euro USD to be a fire trade. We got in based off, and you don't want to just trade because you see that, you know, like you see a structure like this. You also want to look into opportunities for small, you know, for a smaller time frame, smart money. And so in here we saw this candle, and we initially entered off of that in Friday because, you know, we took out these highs right here. Took out these highs of this candle. You know, that nice little, and then big engulfing to the downside. This is nice volume. We see price come up, mitigate this candle, like we usually say. It mitigated it one more time, which is fine. That's why we don't set our thing to break. We don't set our stop loss to break even until we see like a break of structure all the way down here. This is when we set our stop loss to break even. But even though it's still in there, there's another institutional candle right here on the 15-minute. You see price move up, kind of take out these all the highs in here, and then fall down. And so what we're waiting for is probably a nice decent pullback into this area, or we can get another entry and then finally take off, right? And if you look on the higher time frame, I started from higher time frame because, you know, I do think price will come back up here because it needs to make a lower high, right? And it needs to retrace and fill all this imbalance in here. And then also another thing that we see is this trend line right here. Price usually comes back and taps the trend line before it falls again, right? We just see that happen in the market. I can't really explain it, but you usually see price come back up and tap the trend line. So it's all about confluence. And in terms of where I see this pair going, I mean, this could fall for a very long time.
So
Yeah, go ahead.
when we see that eventually come back up and hit the trend line and then start to go back down, how far, like how much momentum does it have to have going down before we can feel comfortable entering the trade?
Oh, I mean, you would enter from the open of the candle, right? So even if it's going up very fast, you got to enter from the beginning of the bullish action. You would enter like right here, the beginning of this 5-minute bullish action. Because in a higher time frame, it's like, yeah, this is an institutional candle right here. But where in the institutional candle are we going to enter? It's here, because this is where the bullish movement started like really moving and took out this high right here, mitigated this candle again to 50%, somewhere around here, and it fell.
Wait, so which one of those candles did you say was the institutional candle?
This one, right? Well, let's go to 15.
Because it was bullish, and then the change to bearish is what would make the institutional candle.
Oh yes. Right here. So this was bullish, and then it fell. Right. This kind of movement doesn't really make a lot of sense, and that's what you know is manipulation. This is institutions doing this, right? If you see it like a very big bearish candle like that, it probably should keep going up, right? But you see this and then a drastic fall. I mean, it's clear that that's institutions, right? So you see price push above this high right here. All these.
Can I ask something?
Yeah, go ahead.
So you can see institutional plays on like really low time frames, like 5 minutes.
Yeah.
Already, because I heard you could only see on the bigger time frame.
Yeah, I mean, it's something you have to train your eyes to see, honestly. You just have to try. You have to just look at charts. Just keep joining your eyes. You know what I'm saying? The more you see, the more you learn.
Thanks.
Yeah.
Thank you.
Yep. And so I'm waiting for that pullback up. And remember somebody asked me about Fibonacci. And so this is a good time to talk about that. In terms of, this is another confluence. And so when you see price fall like this and it creates a lower low, or just creates another low, right? Price usually retraces. And the reason why we see after a big movement in either direction, you see price pull back a little bit because how I was taught is that institutions or just traders in general want to buy cheap and want to sell at a premium. And, they want to buy at a discount and sell at a premium. And, right now, the obvious move is to sell off. Price is probably going to keep selling off, right? But you don't want to put another sell order here. You want for price to come up a little bit, then put another sell order over here, right? You don't want to sell down here. You want to continue shorting down here because this is just way too, it's not a big enough of a premium. If you want to sell an iPad, right? You want your iPad to be very expensive so you can get the most money for it. Right? So you want to short up in here on an expensive region, not in a very cheap region like this. So after price falls down a little bit, it'll retrace at least to like the 0.5 for it to be valid, right? So for it to be a valid retracement, you want price to at least retrace to the 0.5, 0.618, or sometimes the 0.79, right, area. How you draw a fib is, you want to get your fib tool, and you want to draw from the last high all the way to the last low. Right. So let's say we were moving up, right? Let's say we were in an upward direction. Like right here. You would draw it from the, if you're going up, you want to draw it from the beginning to the end. And see price retrace like around the 0.79 area, below the 0.618, before it started heading back up again. And so you want to be taking your entries off of areas that are at a discount for you, right, or at a premium, depending on which direction you're going for. You want to sell at a premium. So if you're looking to short, we don't want to short anywhere below this 0.5 level. We want to short above here. And you can see that this entry over here is around the 0.79. So it's very nice, right? It's another piece of confidence. Hopefully that makes sense for everybody. So that's a trade that we're going to definitely take this week when we get that pullback. And also you see this big gap, that's going to get filled. Like, mark my words, like you'll see that get filled sometimes, like today or tomorrow morning, or that price is going to come back and fill that. Would you buy this right now? No, because price could keep falling before it fills it, but this is going to get filled. That shouldn't happen in the market. But it does, but it usually gets filled.
Quick question about the. Oh, TK, can you hear me?
Yeah.
Quick question about the gaps, because I know you said like they always get filled, but how often will it go back up and fill that and then continue along which way it's going?
Yeah, so I mean, I wouldn't use it as a point where, this is a good time to enter. I would kind of just use this as an overall bias. Like, so you say like right now it's not a good time to another short position because price has to come back at least to this gap. It could keep going up.
Okay.
You know what I'm saying? It's 50-50. It's completely random. So I don't enter off of gaps. They're not entry points for me.
Okay.
Like, let's say I'm
you.
in a short trade and there's a gap all the way down there, then I'll know that my short trade is valid because price has to go fill that gap down there.
Got it. Okay.
And so this is the distribution and accumulation we were talking about on Friday. I showed my my Billionaire Nation chat. So we had entered. So basically, what was the ideology behind this? We saw price moving like this. This is a higher high, past this high, higher low, past this low, higher on here, higher low, higher high. Then we got a break of structure, pass down here to create a lower low. So we knew shorts are now valid. This is the shorting time, right? And you see, I think maybe it was on a 2 hour, no, 1 hour. See price kind of just move, push all the way up, kind of wick above all these highs here. Price moves past all these highs and then falls. What we want though, we want to enter off a retracement. So, price retraced. Well, it's a 0.79, somewhere around there. And came back to mitigate this bullish action that pushed above all these lows and created this new lower low, right? If this lower low was not created, like let's say price, maybe pushed past that, but then stopped around here, then kept going up, then this would not be an opportunity to short. Now that we have broken past this low, I'm looking for the pullback so I can enter somewhere around here into this bullish action that took above these highs. And so what we saw was that price teetered around a little bit. So I was like, what the hell's going on? Like, why didn't we just get a solid rejection? But if you go in a smaller time frame, just like, look what's happening. Distribution. Price is at a expensive area. And so we see the big sell-off. What do we get? Accumulation. Buyers and sellers. What do I do? I'm confused. And finally, buying comes in. Oh, what's happening again? Where we are in a mitigation area, but still buyers and sellers a little bit confused. I saw this and I was like, oh, this is probably just distribution, right? Because we were in an accumulation, now we're in distribution. So I'm like, don't worry, you guys, price will fall. Let's just wait, right? And so you see that little wick. How I was talking about how you create these little, this consolidation, and you see this push past here, then a fall, came back and mitigated, then fall, then fell again, right? So this would have been another great point to enter because this bullish action right here pushed above every single wick in here, except for this one. But these past recent equal highs pushed past by these candles, fell, mitigated again by this one last candle, then big dip. What are we waiting for? Price to pull back around here somewhere, probably fall again. Right.
Sorry, I couldn't hear you when you said like, why didn't you enter, or did you enter at that first point right there?
Which point? Right here?
Yeah, did you enter there, or why not?
Yeah, so when I saw this happen the night before. I talked to Ariel about it, and I entered, I think 4 a.m. that night because I set a sell limit, and I entered here at the very beginning, like the very first entry point that you would probably get.
Okay.
Right, and then I was wondering why we didn't get the big fall after, right? Once I entered, we kind of just stayed, we got stuck here for a little bit, more. And then around 8 a.m., around 8 a.m., price decided to fall.
Got it. Okay.
Yeah. Yeah. Another thing I kind of want to go over is also just like, so how do you like take 3 to 4 trades a week, right? Like, because if you just trade all day and you trade based off any structure you want, you'll probably see 15 to 20 different type like smart money moves, technically smart money moves. But how you minimize to 3 to 4 trades a week is when everything lines up perfectly. So this was at 8 a.m. in the morning. I usually don't like to take trades past past 10 a.m. Central Standard Time or 11 a.m. Eastern Standard Time, all the way until like maybe midnight, right? That's when I'll set my next limit, or maybe after 6 to 7 p.m. when Asian sessions start, right? So the best times to trade for me though is between 6 a.m. to 10 a.m. That's when I really like to trade. But because this was an Asian pair, right? This could have mitigated in the Asian session, which it did around 4 a.m. Right? That's technically still Asian session. It's overlap between London and Asian. A lot of trades you see happening in the overlap between Asian close and London open. So if you don't know what Asian close and London open, all that is, I'll probably send a link to on Google discusses that a little bit. But the specific times when you should really be looking for trades, and so I set the limit the night before, and it hit around 4 a.m. Sometime around there, maybe like 2 a.m. That's Asian session because this is an Asian pair. It's Japanese yen price. Then in the morning around 8 a.m. when the New York session started, price started falling. So you could actually enter the New York session, people who were with me at the time as well.
GK, I have a question.
Yeah, go ahead.
What do you recommend basically for like a currency that's ranging? So like EuroCAD has just been ranging like a bastard for so long. Like, recommend setups wise.
Where my blind? Yeah, asshole currency. So a currency that's ranging. So let's go higher time frames. What's going on? So yeah, for a currency that's ranging, I really like to leave it alone. I don't like to touch it that much, unless it's very clear to me that like smart money is happening. Like it has to be really clear. There has to be structure proof on a shorter time frame. So on a higher time frame, this kind of looks like a range, right? This looks like, depending on where we are, this is distribution, right? Because we're all the way up in this expensive area. This is the cheaper area. This was accumulation here. You can see how price dipped below the equal lows. Like I talked about, you have accumulation making all these equal lows. Price dips below it, then rises up, right? And so what I'm looking for is after this rise, I'll pull back all the way down into here. But you see this range, and it's like you got to think about where do I think price is going to go overall, and what's happening in the shorter time frame. Because maybe if it's in a range and we're all the way up here, we see some smart money play with the downside, then I mean it'll probably fall back down. And so you could possibly enter a short, but the most ideal trades are the ones that are very clear in which direction it's going. So if it's in a range, you got to be really careful. You got to use half positions, even if a setup looks really awesome. That's what I advise. I would just advise going to smaller time frames. So like here, I knew it was in a range, but price broke above these highs and fell. So I wanted to wait for the mitigation, which happened. Price came all the way back up and then shorted off again. Right. And so, yeah, that's basically that. Are there any more questions? I feel like maybe I didn't go over enough. Is there anything else anybody's like particularly interested in finding out about?
Yeah, I have it's definitely not smart money, but
Yeah.
is there any value, like if you could sit at a computer all day and trade with like half a micro lot and just like if you found something that's pretty like steady with like going up and down, I forget, consolidation or
Yeah.
something, or we're just seeing a lot of fluctuation, is there any value in just trying to catch 10 pips on the way down, 10 pips on the way up, 12 pips on the way down?
Yeah. So, I thought about that. I've been trading for like 4 years now, so I've tried everything. And what I've figured from that is that you got to think about like, what is the Forex market like? Forex market is like the most volatile market. $2 trillion is going through it every day. And so it is incredibly random on a short-term basis. Price just moves randomly.
So you end up just risking more than it's worth, is what you're
Yeah,
saying.
you're risking way more than it's worth. In the long run, it's just not profitable to do that. I mean, if there's somebody out there who was able to do that, then I mean, they're a genius. But for the average person, average Joe, like trying to buy and sell on the way up and down, you know what I'm saying, like within the 5-minute time frame and stuff, like price is incredibly volatile in a very short term span. You want to be looking at higher time frame direction.
That makes sense.
It'd be a lot more profitable in that regard. But yeah, I think maybe one last thing, we'll go over the Euro CAD trade that happened this week. But yeah, so we had the mitigation in here. Whatever. 4 hours. So you have this big institutional candle that kind of pushed past all these highs, everything in here, took out all the liquidity above it. Price fell, made an equal low actually, made equal lows, and so came back up to mitigate this and fell. What I was hoping is that we could get like a purge of these equal lows on the way back down, but instead we formed a higher low compared to this one. So I was like, okay, maybe price is going to become bullish. I knew that we at least had to come back into this candle because this is also another institutional candle, right? That broke above these recent highs. And so I was waiting for price to at least come back up in here. And so I kind of was just watching all the action and just going into shorter time frames. And on the way up, I see this candle right here. And I'm like, if price is moving up, like, you know, what's the point of this tiny little, this candle? Or what's the point of this bearish candle? Sometimes if you see a candle like this, we'll call this like a sneaky candle. There might be some smart money in this candle in a shorter time frame. So I went 45-minute, didn't see anything, 30-minute, didn't see nothing. Let me highlight it too so we know what area we're looking at. Okay. Go to the 5-minute. Yeah. 5-minute. And what do I see?
Out of the kitchen.
You see 1, 2, 3 equal lows right here.
But how many pips is it even?
Guys, can we mute our mics? Can we mute the mics? And so you see these equal lows purged by this bearish action, right? And so for the longest time during the week, we were waiting for, you know, maybe a push up and then price to come back down right here. Didn't happen, right, for the longest time. Instead, what happened was we formed more equal lows. 1, 2, until the time that USD news came out and price pushed down these equal lows and mitigated this exact action right here. Came right to the T and then sprung up like a spring chicken, dude. 200 pips. Nasty, right? And so this is a clear example of smart money, but also it's a clear example that news doesn't really matter, right? So the USD news, it came out, but like, you know, why did this have to move? This doesn't even have anything to do with the dollar. This is Euro CAD, right? But news is an excuse to move currencies, right? News comes out and then smart money or institutions use the news as a, you know, proxy for why price is moving. And so we see, you know, some crazy volatility real quick, tap this zone and then fly up to where it was supposed to go in the first place, right? But they knew they just had to mitigate out of these orders first so that they can take advantage of the volatility that came out from the dollar news. So that's why I really like looking for smart money plays when really high volatility news is coming out, because I know banks are going to use that as an opportunity to move price to where it needs to go. I think that's really all we're going to go over for today. We're way past an hour. Well, no, we're not way past an hour. We're actually right at the hour. Great job, Chike. Are there any more questions to end off? Or else, actually, no. I got to go over one more thing. In terms of, you know, Billionaire Nation and how you can get access to a lot of these trades during the week as they're happening, and not just kind of see it at the end of the week, or maybe catch one signal from me per week. To join Billionaire Nation, please just message me on Telegram and I'll give you all the details. We're past the hour now, so I don't really want to go over it on this call. But please feel free to Telegram me. We can get you guys hooked up straight away. All right. Are there any final questions, or else I'm going to go ahead and end the Zoom?
That's it. Thank you, TJ.
All right,
Thanks,
guys.
man.
Cheers, bro. Thank you.
Good week. Peace.